in the LVC classes organized by Board of Studies of ICAI. Students, today we are going to discuss Ind AS 16 again, and we will be completing Ind AS 16 today. Right? In the last class, as I discussed with all of you, this Ind AS 16 is very important standard, and you can use this standard as a fundamental standard to all the asset related standard. Right? So in the next 5 to 10 minutes, quickly, I will revise whatever we have covered in the last class, and then I'll take over and I will continue with the new topics in this standard in the today's class. Okay. The good part about this standard is largely similar to accounting standard 10, property, plant and equipment, except there are very few differences, okay, between AS 10 and between Ind AS 16. But 90 to 95% this accounting standard 10 and Ind AS 16 is one and the same standard, right? 90 to 95%. So students, in the last class, we discussed the objective and scope. I am not repeating again. It's a very theoretical aspect. We discussed in detail this definition of PPE, property, plant and equipment. What is property, plant and equipment? It's a tangible item. One, you can see, you can touch, you can hold, right? So it's a tangible item. Tangible item which is held for. Tangible item which is held for use in production or supply of goods and services.
Recording in progress.
For rental purposes or for administrative purposes right? And we also discussed an exception to the rental purposes. What is the exception to the rental purposes under Ind AS 16? What are the assets which are held for rental? Still, it will not be capitalized as a property, plant and equipment. What are the exception?
Land and building.
Sorry?
Land and building.
Land and building, which is investment property, right? Land and building, which is investment property. And what is an investment property? Land and building, which is held for rental purposes, right, is covered under investment property. So if the company has purchased land and building and the company is earning rental on it, then it will be classified under Ind AS 40, not Ind AS 16. Okay. So that is the only exception. But if a company has purchased machinery and the company is leasing machinery, the company is providing the machinery on rental purposes, then it will be covered under Ind AS 16. Okay. So the company will capitalize machinery as a property, plant and equipment. So tangible item which is held for use in production or supply of goods and services, held for rental purposes and administrative purposes, and expected to be used for more than one period, expected to be used for more than 1 year. Okay. So we covered this definition in detail, right? And then we discussed the recognition criteria, and one aspect we discussed, this recognition criteria holds good for initial cost as well as for subsequent cost also, right? So this recognition criteria hold good for initial cost as well as subsequent cost, right? So there are two recognition criteria. Number one, future economic benefit should be probable. Number two, costs can be measured reliably. If these two conditions will be satisfied, then you can say that this asset has to be recognized as this item has to be recognized as property, plant and equipment. What are the two aspects? Future economic benefits should be probable and cost can be measured reliably. If I purchased a machinery, okay, the moment I am capitalizing and the machine costed me 1 crore rupees, and the moment I am capitalizing the machinery, I know that I will not be able to use this machinery in the production, and I will be able to get the benefit only out of scrap sale. And this 1 crore rupees of new machinery will be sold out for 5 lakh rupees as a scrap value. Will this be considered as a future economic benefit? Is it a benefit? First of all, I am selling a new machinery of 1 crore rupees at 5 lakh rupees. Is it a benefit? Is it an economic benefit? What is meant by economic benefit? Economic benefit means when you are benefited economically. Means you spend 1 crore rupees and you know that I will be able to produce goods for next 5 year, 10 year. So I will be able to get more than what I have invested, right? Probably. So this is not a benefit economically. This is not economic. This is not economical, right? This is not economical because the intent of the machine was not to sell as a scrap. The intent of the machine was to use for the production, right? Otherwise, why somebody will purchase a new machine for selling it as a scrap, right? If you buy a new car, the intent is to sell as a scrap or to use the car for 10, 15 years, whatever it may be, and then sell as a scrap, right? Not the new car to sell as a scrap. So this recognition criteria holds good for initial cost, means the day when you are purchasing this asset, and subsequent cost also. What is the example of subsequent cost? Where we have seen that we have to capitalize that subsequent cost and decapitalize the old cost. What are the examples of subsequent cost which we are going to capitalize? So Saminathan is saying
Replacement of major component.
yes. So it's a major replacement, major overhaul, and major inspection cost. Right? So these are the example of subsequent cost which is going to be capitalized. Day-to-day servicing cost. While day-to-day servicing cost is also subsequent cost, but it is going to be capitalized or charged to P&L.
Charged to P&L.
It will be charged to P&L. You are absolutely right. And I'm really amazed to see the participation and interaction on the chat box. So since morning, when I say since morning, since last 5-6 minutes, everyone is interacting and participating, right? Great. Absolutely great. The more you interact, the more you participate, the more you will learn. Yes or no?
Yes, sir.
Yes. Yes. जितना आप participate करोगे, जितना आप engage करोगे, उतना आप learn करोगे, right? And of course, you have to participate meaningfully, not for the purpose of disturbing the class, but for the purpose of contributing in the class, right? Contributor और distractor, इन दो में difference पता है ना आपको? Who is a contributor? Who contribute to himself and to others as well. Who is distractor? Who destroy himself and destroy others also. Because one who destroy other will eventually destroy himself. Right? Okay? Great. Absolutely great. Absolutely great. Okay. Yes, then we discussed about the spare parts, standby equipment and servicing equipment. Spare part, standby equipment and servicing equipment. Okay. So friends, you know that when you buy machinery, when you buy car, so you got some spare parts, standby and servicing equipment. Whether those spare parts, standby and servicing equipment will be capitalized as a PP or will be capitalized as an inventory. So friends, standard says that if recognition criteria are met, and of course definition is also met, I would say, means if there is a spare part but life is only 3 months, will you capitalize that as a Ind AS 16 PP? करेंगे क्या?
No, sir. We will consider as a inventory.
No, it will be classified as a inventory. Why? Because it is for a very short period of time. So will you capitalize this spare part 4 times in a year? So this will be classified as an inventory. Okay. And whenever you consume it, it will be charged to P&L. Okay. So we discussed this aspect as well. Then we discuss subsequent cost in detail. You remember that same criteria is applicable for subsequent cost. Future economic benefit should be probable and cost can be measured reliably. Day-to-day servicing cost has to be expensed off. Those subsequent costs which are in the form of major replacement, major inspection and overhauls will be capitalized as a part of PP&E, and the old component needs to be decapitalized. Okay. And we discussed the component accounting as well. We discussed if a component in the form of major component, major replacement, major overhaul, major inspection, if they have a different useful life less than the total life of the asset, then we will depreciate those component into the lower life, so that when we replace those component, the carrying value of existing component become zero. It will be fully depreciated. You remember now? आपको याद
Yes,
है या
sir.
नहीं है? यस, सुना सुना लग रहा है या सुना सुना लग रहा है? इज इट समथिंग विच इज हर्ड और इज इट समथिंग विच इज ब्लैंक? रविंदर, इज इट हर्ड और ब्लैंक? योगेंद्र, यस यस योगेंद्र प्लीज.
Sir, we heard, sir.
वी
It is
हर्ड.
not blank. Yeah.
Yes, so it's suna suna, not suna suna. Okay, it's heard, it's not blank. Okay, very good. Because this is a very important aspect. You can expect a question on this major replacement, okay, major overhaul, major inspection. You can expect a question out of it. Okay, and you remember we discussed this question of heavy machinery and the turbine. We discussed this question. Yes, हमने डिस्कस किया
Yes,
था
sir.
ना. एंड
Yes.
लेट मी शो यू द excel file again. In excel file you can see all these concepts have been written, right? This future economic benefit and cost can be measured. Example is also given. Concept of a spare part, initial cost, again example, accounting entry, subsequent cost, recognition criteria, then major replacement, overall inspection, replacement. Okay, this day-to-day charge to P&L capitalized as a part of PP&E. Then truck and engine example. Okay, then the replacement concept. In case of replacement, very important concept. In case of major replacement overhauls, new cost of component needs to be capitalized and the old component needs to be decapitalized. If old component cost or value is not known, the current component cost needs to be taken to arrive at the cost of the old component using the time value of money concept. Okay, right? So this example we discussed from my side with the accounting entry with the numerical as well. Okay, then we discussed an example of aircraft and inspection. Okay, then we discussed illustration number 8. Okay, so we discussed all these aspects in the last class, my dear friends. Then we discussed measurement. So PPE has to be initially measured at cost, and cost includes what? Cost includes what? क्या क्या इंक्लूड होगा कॉस्ट में? Cost
Purchase
includes
price,
purchase price. Okay, yes.
directly attributable cost,
Okay, and
and
cost of removing or restoration,
decommissioning cost, sir.
decommissioning cost. Very good. See, first of all, if you need to purchase an asset or you need to construct an asset, will you purchase something or not? If you have to construct a house, you have to purchase cements, bricks, okay, steel, so wood. You have to purchase a lot of material. Okay, so purchase price. Or if you purchase a house, you have to pay. You have to pay money to the seller. So purchase price plus you purchased a house, you paid some GST, for example. Then the non-refundable taxes, if it is non-refundable, you purchase a car, you paid GST and no input credit of GST is available. So whether car will be capitalized inclusive of GST or exclusive of GST, if no credit of GST is available?
Inclusive of GST.
Inclusive of GST means purchase price plus non-refundable taxes plus import duty minus you purchase a car for rupees 10 lakh but you got some discount, 50,000 Diwali discount. Whether your cost is 10 lakh or 9.5 lakh.
9.5 lakhs.
9.5, whatever you have paid, 9.5 lakh. So purchase price plus import duty plus non-refundable taxes minus trade discount and rebates, okay? Purchase price PP, then import duty ID, then non-refundable taxes, NFT, okay? Then minus discount and rebates plus directly attributable cost. What is meant by directly attributable cost?
Transportation of
What is meant
machinery,
by directly attributable cost?
the cost which
I'm
can be allocated to directly to that particular asset.
the cost which is directly related to the particular asset, the cost which is incurred for bringing the asset into the location and condition for using it as per the management. You purchase the machinery and you purchase this machinery from Japan. The machine is sitting in Japan. Your factory is in Delhi. Will you be able to use the machine? You have paid the money to the supplier also.
No, sir, we enable.
No. So when you
So
will
we
be
are
able to
not
use
a
the machine?
no, sir.
You will be able to use the machine when the machine travel from Japan to India, India to your factory, right? Then it will be installed in your factory. Okay. Then then the trial run has to happen. And once the machine will start, dug, 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 dug. When the machine will start, it will start production. It will start production. So when the machine will start, then only you will be able to use that machine. So machine, so the cost which is incurred for bringing the machine into the location means factory, and condition means installation, trial run, whatever you need to do. Okay. So the cost which is incurred to bring the asset into the location and condition for operating it in the manner intended by the management. So those cost is known as a directly attributable cost. That is first definition. Second definition of directly attributable cost, the cost which can be avoided if the asset would not have been purchased. If this machine would not have been purchased from Japan, whether the transportation cost from Japan to India would have been avoided? Of course, yes.
Yes, sir.
Yes. Or if the asset was not there, this cost would not have been incurred. Right? Okay. So this is known as directly attributable cost. All those directly attributable cost needs to be capitalized, and initial estimate of the cost of decommissioning, dismantling, removing, in short, decommissioning cost. My dear friends, those who are learning FR for the first time, those who are not able to remember what is this decommissioning cost, restoration, site dismantling cost, you will remember this concept of decommissioning cost in three standards: Ind AS 16, Ind AS 116 leases, and Ind AS 37 provisions, contingent liability, and contingent assets. Right. So in the next 1 or 2 months, when you will be able to complete the standard by 31st of October, this decommissioning asset, provision for decommissioning, right? This decommissioning, not asset, cost. The provision for decommissioning, right? Site restoration, asset dismantling, you will be remembered by heart. Okay. So today, you will not be able to take the name of decommissioning cost, but after 2 months, you will be able to use decommissioning cost words by heart. Why? Because this will be covered in three standard and the concept is same. Right? So if you learn, if you remember, if you are able to understand the concept of decommissioning under Ind AS 16, you already know the concept of decommissioning as per Ind AS 116 and Ind AS 37. So 116 and 16 is asset related standard. 37 is a liability related standard, provision related standard. So as I told you in the last class, this decommissioning, this provision for decommissioning, estimate of decommissioning has to be added to the cost of the asset. But what will be credited? What will be the credit leg? The credit leg is provision for decommissioning liability, because this cost has to be payable at the end when the asset has to be dismantled. But PP has to be capitalized at the beginning when the asset is ready for use, available for use. Is that clear or not clear?
Clear, sir.
Clear, very much clear. Absolutely right. Directly attributable cost, we discussed the example. I'm not repeating again. Directly attributable cost, not the example. कौन से एग्जाम्पल नहीं है डायरेक्टली एट्रीब्यूटेबल कॉस्ट के? ये चार नहीं है. इसके अलावा मैंने आपको और बताया था इनिशियल ऑपरेटिंग लॉसेस. बताया था या नहीं बताया था? इनिशियल ऑपरेटिंग लॉसेस बताया था, नहीं बताया था? बताया था. ओके. आई टोल्ड यू. ओके. Initial operating losses I have also covered, Saminathan. Okay. Yes. So these are the examples which are not the directly attributable cost. Then, my dear friends, I also discussed about this decommissioning, which is as per Ind AS 37. Okay. Then we discussed an example from ICAI study material. This is the example from ICAI study material. Okay. This example of measurement of cost. Then we discuss the concept of deferred payment credit. What is a deferred payment credit? When an entity is paying as per the deferred payment terms, so the PPE has to be capitalized at the cash price equivalent. And the difference between the consideration paid, means the total amount paid less cash price equivalent, difference between the consideration paid and the cash price equivalent, difference between the consideration paid and the cash price equivalent has to be recognized as a interest cost. Okay, right? So this is the example we have discussed from ICAI study material, and we also discussed almost 7 or 8 multiple choice question, right? My dear friends, I hope you are able to understand this. I hope you are able to revise this class first in detail in this 20 minutes. I hope you find it useful.
Yes, sir.
Yes, everyone, please let me know. Hope you have find this useful. You find this useful or you haven't find this useful? Okay, great. Great. Okay, now let's discuss the next concept, exchange of assets. Sir, if we have not, you know, paid the money in terms of consideration, but we have paid, you know, but we have paid in terms of exchange of asset, means we have paid in terms of other assets. Okay, we acquire some asset and we have paid in terms of other assets. Okay, exchange of asset. What is meant by exchange of asset? What is meant by exchange of assets? Okay, means barter. So the normal scenario is you purchase the asset and you pay the money, cash. But what happens if you have purchased the asset, let's say building, and you are paying the consideration in the form of car? You are not paying cash, you are paying through car. You buy a building and you paid by car, means barter, exchange. So the question arises, when it was money, it was very simple. When it was money, it was very simple. Because the fair value of the consideration given, which is money, which is cash, is the same. What is the fair value of 100 rupee note? What is the fair value of 100 rupee note?
100 rupees only, sir.
100 rupee. Fair value of 100 rupee note is 100 rupee, right? Fair value of 100 rupee note is 100 rupee only. Very good. So when we are paying through cash, so we are recognizing our PPE at the fair value of the cash given, at the fair value of the cash given. And what is the fair value of the cash? The fair value of the cash is the value of the cash. You all agree with me or you agree to disagree with me? You all agree with me?
Yes, sir.
Yes, very good. So you all agree with me. You all are saying you are absolutely right, sir. The fair value of the cash given is the value of the cash given, right? Means we are recognizing PPE at the fair value of the item or fair value of the asset given. If we are giving cash, so the fair value of the cash is the value of the PPE acquired. Means whatever we are giving, right? Whatever the company is giving, entity is giving, so entity is recognizing the PPE at the fair value of the asset given. The asset could be cash, the asset could be other asset as well. Yes or no? Yes. So in case of exchange of asset, this exchange means a PP is acquired in exchange of non-monetary asset or combination of monetary and non-monetary asset, right? So what you can do, you can buy a building and you can pay through a car, or so this is a complete exchange with the non-monetary asset. But there could be a combination of monetary or non-monetary asset also. For example, a company has bought a building, and in return the company has paid cash of 20 lakh and 2 cars. तो यहां पर क्या है, कॉम्बिनेशन ऑफ मॉनेटरी एंड नॉन मॉनेटरी एसेट, कॉम्बिनेशन ऑफ मॉनेटरी एंड नॉन मॉनेटरी एसेट. ओके, combination of monetary and non-monetary asset is there. So example, a building is purchased in exchange of Mercedes car and 20 lakh rupee of cash. So combination of monetary and non-monetary asset. Second example, a building is purchased in exchange of an aircraft, non-monetary asset exchange. Okay. So in case of exchange of asset, what will be the value of acquired PPE? भाई acquired PPE की value क्या होगी? in case of exchange of asset, what will be the value of the acquired PP? So standard says that if the transaction does not have the commercial substance, then asset acquired has to be recorded at WDV of the asset given. Okay. If the transaction does not have commercial substance, what does it mean? Commercial substance means the nature and timing of the risk and cash flow from the asset has to be different. Matlab, for example, if a company has bought Maruti Wagon car, let's say Maruti Swift car. If a company has purchased Maruti Swift car in return of giving Maruti Swift car, so whether this transaction has a commercial substance, the company is buying Maruti Swift and giving Maruti Swift. So whether the nature and timing of the risk and cash flow will be different from these two assets? These two assets are the same asset? Answer is no.
No,
These
sir.
would not be different, right? So this transaction does not have commercial substance. You for CA final student, small student, kids, right? So how do you know whether the transaction have commercial substance or not? If the transaction is happening between the same assets, between the same nature, same class of asset, so a company is buying car, giving car, okay, then you can say that the transaction does not have a commercial substance, right? Transaction does not have commercial substance. If transaction does not have commercial substance, then at what value you will recognize the Maruti Swift car taken? Maruti Swift car acquired, at what value will capitalize? You will capitalize at the WDV of Maruti Swift car given. जो कार आपने दी है वो आपकी बुक्स में होगी ना या नहीं होगी? Whether the car which you have given, whether that car would have been in your books of accounts or not?
Yes, sir.
Of course, yes. Of course, yes. So if it would have been in your books of accounts, that car would have been some value ना, WDV तो होगी, net block तो होगा कार का. Yes, the car would have net block, WDV. Yes or no? Yes.
Yes, sir. Yes, sir.
So what is my value of the asset acquired? My value of asset acquired is to the value of the asset given up. Which value? WDV. WDV. Okay. If the transaction does not have commercial substance, asset acquired has to be recorded at the WDV of asset given up. Example: A Limited purchased Maruti Wagon in exchange of Maruti Swift car. The WDV of Maruti Swift in the books of A Limited is 5 lakh. What is the value of Maruti Wagon? That is the PP acquired. बताइए.
It is also 5 lakhs, sir.
It is 5 lakh. It is the value at the asset given up. It is the value of the asset given up. So this transaction lacks commercial substance and hence the asset acquired should be recorded at WDV of the asset given up. WDV of the asset given up, right? Sir, if the transaction has the commercial substance, then what happen? Sir, if the transaction has the commercial substance, then what happen? Then what will happen? Then the acquired asset has to be recorded at fair value. If the transaction has the commercial substance, then the acquired asset has to be recorded at fair value. Then the acquired asset has to be recorded at fair value, right? Fair value. Okay. Sir, which fair value? Which fair value? Which fair value and how will you recognize the fair value? How will you recognize the fair value? कैसे करेंगे बताइए? How will you recognize the fair value? If the transaction is commercial substance, asset has to be recorded at fair value. Which fair value? कौन सी fair value? कौन सी fair value? So
Sir,
Saminathan has given answer. Sir, fair value of the asset given up. Okay. My dear friends, you acquire a building and you pay through Mercedes car. What is the value of the building acquired? At what value building will be capitalized
in this
as a
case,
PP?
We take fair value of merchandise when plus cash paid.
If the cash is there, then okay, right? Yeah. So in my example, no cash is there, for example. So fair value of Mercedes, fair value of Mercedes is equal to value of the building acquired. Value of the building acquired, right? Why? Why we have capitalized our building at the fair value of the Mercedes given? Why? Because it is the consideration given to buy that building. It is the consideration given to buy that building. Yes or no? Forget about this Mercedes car. You buy a building for 20 lakh rupee. You pay 20 lakh rupee cash in a suitcase. You, 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 you place 20 lakh rupee in a suitcase and you went to the builder and you paid 20 lakh rupee suitcase and you buy a building. So, were you capitalizing that building at fair value of the building or fair value of the cash?
Fair value of the cash.
Let me give you one more example so that you will be able to understand the relevance. The fair value of the building is 50 lakh rupee. The fair value of the building is 50 lakh rupee. The buyer was not able to sell the building, okay? Because the recession is there, and at this point of time, nobody wants to invest in the real estate. The builder was in urgent need of money. The builder was in urgent need of money. The builder was in urgent need of money. The builder approached one of the buyer and builder told, if you will buy this building today and you will give me the cash, I will give you 60% discount. Means the fair value of the building is 50 lakh rupee, but I will give you this building at 20 lakh rupee. I will give you this building at 20 lakh rupee. Rohan is the buyer. Rohan went to the builder and Rohan bought this building and Rohan paid 20 lakh rupees of cash. Now tell me, at what value this building has to be capitalized? 20 lakh rupee. Because since your childhood days, without understanding the logic, you understood one thing, that whatever money we are paying, that is the value of the asset we are acquiring. Yes or no?
Yes,
Yes
sir.
or no? Yes. यही तो आपने सीखा है ना बचपन से? यही सीखा नहीं सीखा? You guys have learned that if I am paying 100 rupee, 100 rupee is a cost to me. If I am paying 120 rupee, 120 rupee is a cost to me. If the seller has given you good discount, you are paying only 60 rupee. 60 rupee is a cost to me. This is what it is there in your subconscious mind. Subconscious mind. But have you thought about, as a chartered accountant, why we are recognizing at the value of the cost which we are paying, which we are giving? Because whatever you are acquiring, right, you are not recognizing, you are not capitalizing at the fair value of the asset acquired. Rather, you are recognizing the asset acquired at fair value of the asset given. If we are giving 60 rupee cash, so the fair value of the 60 rupees is 60 rupee. Fair value of 100 rupees, 100 rupees. Fair value of 120 rupees, 120 rupees. Right. So friends, have you understood this example of the building? So while the fair value of the asset acquired is 50 lakh rupee, but fair value of the cash given is 20 lakh rupee. So since you have to capitalize at the fair value of the asset given, which is fair value of the cash given, which is 20 lakh rupee, right? So if you will recognize this building at 50 lakh rupee, how you will balance the entry? You have not paid 50 lakh rupee, you have paid only 20 lakh rupee. Technically speaking, you got a huge discount on this transaction. So 20 lakh is a cost to you, not 50 lakh is a cost to you, right? So that is why we are recognizing the value of the asset acquired at a value of the asset given. at a fair value of the asset given. We are recognizing at the fair value of the consideration given. What is fair value of the consideration given? It could be fair value of cash given. It could be fair value of asset given. Now, my dear friends, by your heart, have you been able to understand this? भाई पहले हम कैश पे कर रहे थे, अब हम एसेट पे कर रहे हैं. एज सिंपल एज दैट. या clear? Now in your
Yes, sir.
subconscious mind, now have you understood the logic, the science behind this in your subconscious mind? Yes, yes. If the transaction has commercial substance, asset has to be recorded at fair value. Okay. Fair value has to be taken as per the below hierarchy. If both the fair values are given, now there is a tweak. Sir, in examination question, fair value of the asset acquired will be given and fair value of the asset given up will be given. Which fair value will use? अगर दोनों फेयर वैल्यू दी हुई है तो कौन सी फेयर वैल्यू यूज करोगे?
Fair value of
बताइए.
asset given.
Yes, fair value of the asset given up. Rachit, which fair value will you use? In examination question, remember all both the fair value will be given just to confuse you guys. And you know, most of the student in hurry, they will always use fair value of the asset acquired, which is wrong. Always remember, guys, your value of asset acquired is equal to value of the asset given up. Right, Rachit? So if both the fair values are given, Rachit, then fair value of the asset given up is the value. Okay. Sir, if only one fair value is given in the question only fair value of the asset given up is given. Very good, बहुत बढ़िया. Right? Sir, in the question only fair value of the asset acquired is given and no other fair value is given. Then
We will consider the fair value of acquired asset only.
if in the question only fair value of asset acquired is given, then you have to use that fair value, otherwise not. Okay. Sir, if both the fair values are not given, then both the fair values are not identifiable, not given, then at what value I will record my asset acquired? किस वैल्यू पे मैं
At
अपना
the
एसेट अक्वायर्ड को रिकॉर्ड करूंगा?
value of the given asset in our books.
Yes. So value of the asset in our given value of the asset given up in our books. So technically speaking, I will recognize WDV of the asset given up. I will recognize at WDV of the asset given up. WDV of the asset given up. Okay. So both the fair values are given, fair value of the asset given up or fair value of the asset acquired. Both are identifiable. Fair value of asset given up. Fair value of the asset given up, fair value of asset acquired, whichever is identifiable. If both the fair value are not clearly identifiable, WDV of the asset given up. Okay, right? Should I write examples also? चलो जी. सर एग्जाम्पल के बिना तो मजा ही नहीं आता. Okay, without example we are not complete, sir. Okay, so let me write example. So Rohan, I can see you have logged in with 3 IDs. So Sanket ji, will you able to see 3 Rohan in the classroom? Example. Okay, let's give some example. A Limited has acquired a building in exchange of BMW car. In exchange of BMW car. Okay, in exchange of BMW car. The WDV of the BMW car in the books of A Limited is 1 crore. Advise the amount at which building is going to be capitalized in the books of A Limited in the below scenarios. in the below scenarios. Right. Case 1. The fair value of the building is rupees 1.5 crores and the BMW car fair value is 90 lakhs, or let's say is rupees 1.1 crore, is rupees 1.1 crores. Tell me, at what value this building is going to be recognized?
1.1 CR, sir.
So in this case, both the fair values are given, hence we will use the fair value of the asset given up. Okay. In this case, both the fair values are given, hence we will use the fair value of the asset given up. Okay. So what is the accounting entry? Building PP account, building PP account debit. Let me see whether you will be able to give the right answer or not. At what value? 1.1 crore? Yes?
Yes, sir.
1.1 crore. 2. BMW car account. To BMW car account. Okay, that was also PP. Let not write PP. I don't know whether that could be inventory also. Credit. At what value? 1.1, right? Right? Chartered accountants. Yes. 1.1 crore credit. Yes.
1 CR, sir.
I would request these kind of answers has to be given on the chat box so that people will be, allowed to think. Ravinder,
Okay.
I should credit my BMW car with 1.1 crore, correct? Entry tallied. Saminathan. So Rachit is saying no, sir, 1 crore. Ravinder is saying yes, sir. Saminathan, what about you? No, sir. Okay. Guys, tell me one thing. If your BMW car was sitting in your books of accounts, when you will de-recognize, when you will credit your asset, at what value you will credit your asset? The value which is lying in the books of accounts. उससे ज़्यादा से कैसे credit करोगे? Right. So here, what is the concept? The concept is you are recognizing the value of the asset acquired. For computing the value of the asset acquired, you are saying that my fair value of the asset given up is the value of the asset acquired. So this 1.1 you are arriving for the purpose of building. But if you have debited your building by 1.1 crore, it means 1.1 crore worth of building we have received. And we will always credit the asset which is with the value in our books of account, which is 1, and 2 to gain on exchange. To gain on exchange credit. Is balancing figure this minus this. How many of you are not able to understand this? How many of you are not able to understand this? कितने लोगों को समझ नहीं आया ये? Right? Okay. Clear? Very good. Now case 2. See, this accounting entry has also helped, right? This accounting entry has also helped. Okay. See, this small will help you. The fair value of the building is 1.5 crores and the BMW car fair value is not available. Now, at what value we will recognize this building? In this case, only fair value of asset acquired is given, is available. Hence, we will use the value of asset acquired. What is the accounting entry? Building PP account debit. At what value? Building PP account debit at what value? Of course, 1.5 crore. To BMW car account credit 1.5 crore, right? BMW को भी 1.5 से क्रेडिट कर दूं रविंदर? No, sir, BMW has to be credited only with the balance available in the books of accounts. जितना available है उतने से ही तो करेंगे क्रेडिट 0.5 करो. Okay, right? Okay. Case 3. The fair value of neither building nor BMW car is identifiable. The fair value of neither building nor BMW car is identifiable. क्या करें फटाफट बताइए. Give me the answer quickly, guys. At what value I will recognize my asset? So building account debit to building PP account debit to car तो होगा but value क्या होगी? Value is WDV. In this case, no fair values are available. Hence, we will use WDV of asset given up as the cost of asset acquired, right? Which is 1 crore. So building account debit 1 crore to BMW car 1 crore, right? Or let me write 1 here and this. Okay. Clear? Is that clear? I hope the exchange of asset is clear to all of you. Yes or no? Is this clear to all of you? Yes or no? Now, let's discuss the question on exchange of asset from study material. Pluto Limited owns land and building. Pluto Limited owns land and building which are carried in its balance sheet at an aggregate carrying amount of 10 million. So this building, land and building is lying in the balance sheet. WDV is 10 million. The fair value of the asset given up means because the land and building is lying in the balance sheet means they are giving this asset. So WDV is 10 million and the fair value is 15 million. It exchanges the land and building for a private jet which has a fair value of 20 million and pays additional 3 million in cash. So the company is giving land and building and the company is acquiring a private jet. And the fair value of the private jet, the fair value of the asset acquired is 20 million and pays additional 3 million in cash. So fair value of the asset acquired is given, right, which is 20 million and pays 3 million in cash. So this is a combination of monetary and non-monetary. So what this company is doing, this company is acquiring. Always remember, if this kind of question will come in exam, first of all, write the information like this manner. Asset acquired, private jet, okay, is equal to asset given. You will never do the error in the exam, never do the mistake in the exam if you will write in this manner. Private jet is equal to land and building plus 3 million cash. Is that right or not right? I hope I'm
Yes,
right.
sir.
Okay.
Yes, sir.
Okay. Yes. Okay. Yeah. So now with this, we know that the asset acquired is private jet. The asset given up is land and building and 3 million cash. And what you can do, just in this equation, you can also write the fair value of the jet is given, fair value is equal to 20 million. And land and building WDV is equal to 10 million. And fair value is equal to 15. And cash की fair value तो same ही होती है. Okay. Yeah. So guys, just by writing this equation and putting this information here, do you need to refer the question again? No. This is quite simple. All the information has been captured. Now you tell me at what value this private jet is going to be recorded in the books of account. First of all, private jet account debit, private jet PP account debit at what value? The fair value of the asset given up. Which asset given up? Land and building plus cash. The fair value of the land and building is 15 million. The fair value of the cash is 3 million. So 15 plus 3, 18. So private jet account debit 18 million. 2. Land and building credit. 2 land and building credit by which value? 15 million, right? 2. So private jet account debit 18 million. 2 land and building credit 10 million. You are absolutely right. 2 cash 3 million. So 18 debit, credit 10, credit 3. So balancing figure 5. What is the balancing figure 5? The balancing figure 5 is the gain on exchange. Balancing figure 5 is the gain on the exchange, right? Right, Saminathan? Saminathan, we have paid 3 million cash also, ना? तभी तो वो इक्वेशन बनाई थी Saminathan ताकि कोई गलती ना हो. We have drafted this equation so that you will not be able to make any error. Private jet is equal to land and building plus 3 million cash. So provided that the transaction is commercial substance, the entity should recognize the private jet at a cost of 18 million, which is its fair value, and should recognize a profit on disposal of the land and building of 5 million calculated as follows. 18 million minus 10 million is the WDV, 3 million is the cash, 5 million is the profit. PP private jet account debit 18 million, credit PP land and building 10 million, credit cash 3 million, profit on exchange 5 million, right? I hope this exchange of asset is very much clear to each and every one of you, my dear friends. Yes or no, please tell me. Yes or no, please tell me. Yes? Very good. So friends, we have covered the initial recognition part, means we have covered the PP has to be initially measured at cost, right? And we discussed the cost formula, and we discussed the cost in case of deferred payment credit, cost in case of exchange of asset. We have discussed all these aspects with the help of examples and the question from the ICAI Board of Studies material. Now we are moving to subsequent measurement. Measurement subsequent to initial recognition means subsequent measurement. Subsequent measurement means at the reporting date. We are going to discuss about at the reporting date. Now, my dear friends, at the reporting date, what we will do at the reporting date? क्या करें? What we will do at the reporting date? There are two models. Have you heard about two models? Subsequently, asset has to be measured using. ये आपने AS 10 में भी पढ़ा था और पुराने वाले AS 10 में भी पढ़ा था. What are the two models available for the subsequent measurement? Give me answer, fatafat. Give me answer quickly. Cost and reevaluation model. Cost model and reevaluation model. Cost model and reevaluation model. Right? Cost model and reevaluation model. Okay. Cost model and reevaluation model. What is cost model and what is revaluation model? What is cost model and what is revaluation model? Yes, you are right, Ravinder. Cost model and revaluation model. What is cost model? What is revaluation model? Let's discuss this in detail, cost model and revaluation model. Let's discuss this in detail. Okay. So measurement subsequent to initial recognition means subsequent measurement. I hope my Excel file is visible to all of you. Is it visible? Excel file? Yes, great. My dear friends, measurement subsequent to initial recognition means subsequent measurement. Initial recognition means recognition and transaction date. Subsequent to initial recognition means recognition after transaction date. For example, reporting date. Let me write the example for this also. इसके लिए भी एक example लिख दूं. Shall I write an example for initial recognition date and subsequent recognition date? Yes, Ravinder is saying yes, sir. Okay, good. This will help you. Okay. So Ravinder Limited purchased a car on 1st November 2025. Okay, 2025 for rupees 10 lakhs. Right. And the life of the car is 10 years. On 31st March 2026, company है. On 31st March 2026, the company is finalizing the value of this car, right, to be taken on the balance sheet. Okay. For example, the company will depreciate, right? In this case, what is initial recognition date and what will be initial recognition, right, date, initial recognition and measurement date, and what will be subsequent measurement date, because subsequently it has already been recognized. Subsequently you have to measure it, right? Subsequent measurement date. रविंदर फटाफट बताओ. So initial recognition and measurement date is equal to transaction date is equal to 1st November. Subsequent measurement date is equal to 31st March 2026. Okay, Ravinder, happy now? Okay. Right. So there are two models which we are learning since our childhood, cost model and revaluation model. What is cost model? First of all, let's understand the cost model, then we'll come to the revaluation model. Right. So first of all, what is cost model? What is my cost model? My cost model is means the PP has to be carried at original cost, right? In this subsequent measurement, my dear friends, This subsequent measurement tells you how to arrive at the carrying value of the asset in the balance sheet. How to arrive at the carrying value of the asset in the balance sheet. This subsequent measurement will tell you. Okay. So cost model and revaluation model. First, we are discussing cost model. Cost model means the asset, the PPE has to be carried at cost. PPE has to be carried at cost. Okay. Means no fair valuation, no revaluation, nothing. No fair valuation, no revaluation. I hope my voice is audible to everyone. Is it audible to everyone? Yes. Okay, very good. So cost model means the asset, the PP has to be carried at original cost. Means gross block कौन सा होगा? What will be the gross block? The gross block will be the original cost. The gross block will be the original cost, right? Okay. And what is the formula of carrying value? Carrying value कैसे निकालेंगे 31st मार्च को? How will we arrive at carrying value? The carrying value is equal to, carrying amount is equal to original cost minus accumulated depreciation minus accumulated impairment losses. Accumulated depreciation minus accumulated impairment losses minus accumulated impairment losses. Okay. Minus accumulated impairment losses means on the reporting date, you have to depreciate and you have to check the asset also for impairment. You have to check the asset for impairment purpose as well. You have to check the asset for impairment as well. Okay, you have to check the asset for impairment. Right? So carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses. I hope this is clear to all of you. Yes, very simple. Now let's discuss this entire aspect with the help of an example. Okay. For example, original cost is 1 lakh rupee. Useful life is 5 years. Impairment loss at the end of the second year is 5,000 rupees. You need to compute the carrying value of PP in case the company has opted for cost model. In case the company has opted for cost model. Okay. Friends, my original cost is 1 lakh rupee. What is my original cost? My original cost is 1 lakh rupee. Okay. When I purchase the asset, my original cost is 1 lakh rupee. Friends, what is my remaining life when I purchase the asset? What is my remaining life when I purchase the asset? 5 years. Okay. 5 year is my remaining life when I purchase the asset. When I purchase. Okay. Now, what is my depreciation? What is my depreciation? My depreciation is 1 lakh divided by 5. Cost divided by remaining life. Okay. What is my impairment loss at the end of the first year? What is my impairment loss at the end of the first year? 0, right? 0. So what is my carrying value at the end of the first year? 80,000. At the 80,000. Okay. What is the remaining life? What is the remaining life at the end of the first year? How much life is remaining? 4 years is the remaining. Now, depreciation for second year. How much depreciation is for second year? See how I am calculating. See how I am calculating. I am calculating with the opening WDV divided by the remaining useful life. Opening WDV means opening balance at the beginning of the second year, right? Divide by opening balance at the beginning of the second year, divide by the remaining useful life. Divide by the remaining useful life. Remaining useful life is 4 years, right? At the beginning of second year के beginning में या first year के end में बची हुई life कितनी होगी? 4 साल. Then what is my impairment loss? What is my impairment loss? Given in the question, 5,000 rupees. 5,000 rupees is my impairment loss. Anyone who is not able to understand this part? Anyone who is not able to understand this part? Anyone who is not able to understand this part? Anyone, please let me know. Clear? Ravinder? It is very important. Please confirm if it is clear to everyone. Yogendra? Rohan? All of you, is it clear, not clear? Aruna? Aruna, is it clear, not clear? Okay, clear. Yes. So now, my dear friends, at the end of the second year, what is the remaining useful life? 3 years. Sir, in the first year, 1 lakh divided by 5, 20,000 was the depreciation. Can't we use 20,000 every year? Or the way you are doing the calculation, your opening WDV divided by remaining useful life, that has to be done. Always remember, compute the depreciation every time by opening WDV divided by remaining useful life. Why? Now you got the trick. Now you will be able to understand. Can I write 20,000 here? Can I depreciate 20,000 here? No, that is wrong. That is wrong. My dear friends, at the end of the second year, Ravinder, at the end of the second year, the WDV is 55,000 and 3 years are remaining. What does it mean? मुझे अगले 3 साल में कितना डेप्रिशिएट करना है? मुझे अगले 3 साल में कितना डेप्रिसिएशन चार्ज करना है? 20,000 multiply by 3? No. If you will depreciate 20,000 multiply by 3, your asset will be negative 5,000. You have to change your depreciation. Why? Because you have already charged extra depreciation in the form of impairment. आपने impairment के फॉर्म में एक्स्ट्रा डेप्रिसिएशन चार्ज कर लिया है. You have to charge. You have already charged extra depreciation in the form of impairment. Now, what you need to do? What is my opening WDV? 55,000. What is my remaining useful life? 3 years. The 18,333 is my depreciation. And what is my impairment loss at the end of the third year? 0. What is my carrying value at the end of the third year? My carrying value is original cost minus accumulated depreciation minus impairment loss. Okay. Now, what is my remaining useful life? 2 years. What is my depreciation for fourth year? Divide by 2. And this is 0. What is my carrying value at the end of the fourth year? Original cost minus accumulated depreciation minus accumulated impairment loss. What is my remaining useful life at the end of the fourth year? 1 year. Remaining useful life is 1 year. So what is my depreciation? Again this. Impairment 0. Okay. Impairment 0. Right. What is your WDV at the end of the fifth year? 0. Have you understood this cost model? Yeah. In your cost model, your carrying amount, your WDV will be computed with the original cost minus accumulated depreciation minus accumulated impairment losses. Right? Right? Clear? Is that clear? Is that clear, my dear friends? Clear, not clear? Please tell me. Is it clear or not clear? Please tell me. Yeah? Yep. And you understood why I have used the formula every time I was computing opening WDV divide by remaining useful life. It will help you. It will help you. It will prevent the mistake happen in case when there is an impairment loss or probably change in the value. Okay. Or probably change in the value. Clear? Shall I move to the revaluation model calculation? Yeah. Students, do you have any question? Please let me know right now. Yes, let's go to the revaluation model. We have to cover some other aspect as well, right? Okay, we have to cover some other aspect as well. Okay. Revaluation model. What is the revaluation model? Revaluation model means fair value model. Revaluation model means fair value model, right? Means the PPE has to be carried at fair value. The PPE has to be carried at fair value. Okay, the PPE is carried at fair value. And carrying value is equal to revalued amount minus subsequent accumulated depreciation minus subsequent impairment losses. Why this is subsequent? What is this revalued amount? Fair value. Okay. And why it is saying subsequent accumulated depreciation, subsequent impairment losses? You will be able to understand. You will be able to understand when I will cover this question. Okay. When I will cover this question. Okay. Original cost is equal to 1 lakh rupee. Useful life is 5 years. Useful life is 5 years. The company has revalued its PPE at the end of second year at 90,000 rupees. Impairment loss at the end of third year is 5,000 rupees. Compute the carrying value of PP in case the company has opted for revaluation model. Compute the carrying value of PP in case the company has opted for revaluation model. Okay. Original cost is 1 lakh. Useful life is 5 years. And company has revalued its PP. Kab? Company has revalued its PP at the end of the which year? At the end of the second year at 90,000 rupees. Okay. And impairment loss is also given in this question at the third year is 5,000 rupees. Compute the carrying value of PP in case the company has opted for revaluation model. What is the cost of the PP? 1 lakh rupee. What is the remaining life? 5 years. Okay. What is my depreciation for the first year? 20,000. What is the impairment loss at the end of the first year? 0. What is the carrying amount at the end of the first year? 80,000. What is the remaining life? 4 years. Any doubt? Now, what is my depreciation for second year? My depreciation for second year is 80 divided by 4, 20,000. Is there any impairment loss at the end of the second year? No. So, what is my carrying value at the end of the second year? My carrying value is 60,000 rupees. What is my revalued amount at the end of the second year? What is my revalued amount? 90,000 rupees is my revalued amount. 90,000 rupees is my revalued amount. Okay. 60,000 is my WDV. 60,000 is my WDV. 90,000 is my revalued amount. What should I do? What should I do? बताइए फटाफट क्या करें? I have opted for revaluation model. I have opted for revaluation model. 60,000 is the WDV and revalued amount is 90,000. What should I do? I have to revalue my PP. I have to revalue my PP. 30,000 will go to revaluation reserve. Right? You are absolutely right, Saminathan. So PP account debit to revaluation surplus. How much? 90 minus 60. 30,000 is my revaluation surplus. Okay. Yeah. Yes. So now what is my revalued amount? 90,000. Friends, if my fair value is 90,000, should I carry my accumulated depreciation of the past also? क्या मैं past का accumulated depreciation carry करूंगा? Should I carry my accumulated depreciation of the past also? Of course, no. You are absolutely right, Ravinder. No, I will not carry my accumulated. Now I got a new value. At the end of the second year, my original cost is replaced by the fair value. My fair value is 90,000. See, my carrying value was only 60,000 rupees, but my fair value is 90,000 rupees. So now I will depreciate in future with 60,000 or 90,000? With 90,000 rupees. In revaluation model, every time you revalue, your fair value will replace your original cost. WDV, your fair value will replace all the past. All the past baggage has gone. Okay, right? So that is why it is written. The PP is carried at fair value and carrying value is equal to revalued amount minus subsequent accumulated depreciation minus subsequent accumulated impairment losses. Okay, now, my dear friends, what is my carrying value? Now, what will become my carrying value at the end of the second year? Now, this 90,000 will become my carrying value at the end of the second year. And what is my remaining life? My remaining life is 3 years. Okay. Now, what is my depreciation? What is depreciation, my dear friends? What will be my depreciation? This divided by this. You remember I always told you, always compute the depreciation as a opening balance divided by remaining useful life. This will always prevent you from the mistake. Okay. Because whenever there is an impairment loss or change in the value as per revaluation model, your day one का depreciation concept will just ditch you. Okay. Clear? Is that clear? Okay, 30,000. Friends, is there any impairment loss also in the question? In the question, there was an impairment loss at the end of the third year is 5,000 rupees. Okay. So yes, third year, 5,000 rupees. Now, What is my carrying value at the end of the third year? My carrying value at the end of the third year is 55,000 rupees. And what is my remaining life? 2 years. Friends, you can see revalued amount is 90,000 minus subsequent accumulated depreciation minus subsequent accumulated impairment losses. So this has given you the carrying value at the end of the third year. Now what is my depreciation for the fourth year? This divided by this. You can see my depreciation changed again, 27,500. Impairment loss 0. What is my carrying value at the end of the fourth year? 27,500. Remaining life 1 year. Depreciation for fifth year. This divided by this. Impairment loss 0. Carrying amount is at the end of the fifth year is 0. Right? Clear? Why revaluation model should be adopted? Revaluation always shows the actual picture or fair value of the asset at a particular point in time. That is why companies are adopting revaluation model, right? That is why people are using revaluation model, but largely in the practical world, people are using cost model, right? Because the problem is in revaluation model, you have to get the revaluation done through the registered valuer, which is again a cost and the timely cost and the time consuming task. At what frequency revaluation model is required to be done? At what frequency revaluation is required to be done? If there is a major volatility in the prices, do the revaluation at every reporting date. Sir, if we have opted for a revaluation model for a building, for example, right? So do we need to do the revaluation at every year end? Standard says that if there is a major volatility in the prices, for example, you purchase a building and there is a major volatility in the building prices, right? In that case, you have to do the reevaluation at every reporting date. But if there is no major volatility, the market is stable, 5-10% normal inflation related or 5-10% related inflation is just happening, right? If that is the case, then if there is no major volatility in the prices, do the revaluation at the interval of 3 to 5 years. अगर आपने रिवैल्यूएशन मॉडल ऑप्ट कर लिया तो आपको रिवैल्यूएशन करना है कब? हर एक रिपोर्टिंग डेट पे. कब करना है? हर एक रिपोर्टिंग डेट पे. अगर प्राइसेस पे वॉलेटिलिटी बहुत ज्यादा है, इफ देयर इज मेजर वॉलेटिलिटी इन द प्राइसेस, do the revaluation at every reporting date, get the fair valuation done. But if there is no major volatility, do the revaluation at the interval of 3 to 5 years. Okay, right? Clear? Is that clear? And my dear friends, the company needs to apply the cost model or revaluation model consistently to a class of asset. Now, sir, there are two model, cost model, revaluation model. Sir, how will we apply cost model or revaluation model? Standard says that whatever model you want to apply, you have to apply consistently to a class of asset. What is meant by class of asset? First of all, let's understand. Class of asset means a grouping of asset of a similar nature and use in an entity's operation. Friends, a company has 5 buildings. A company has 5 buildings. 3 buildings are used for the purpose of office. 3 buildings are used for office purposes. 2 buildings are used for factory purposes. 2 buildings are used for factory purposes. If 3 buildings are used for office purposes, 2 buildings are used for factory purposes, tell me how many class of assets are there in this case. In this example, how many class of assets are there? 1 asset which is building, or 2 class of asset which is factory building and office building. Yogendra and Saminathan is saying 2 class of asset. Why? One person is saying 1 class of asset. Why? And Ravinder is also saying 2 class of asset. So friends, what is the definition of class of asset? A grouping of asset of a similar nature and use in an entity's operation. While all these 5 are building, but if I talk about the nature and use, so 2 buildings are used for factory and 3 are used for office, administrative purposes, and the use is different. 3 building is a very sophisticated use. People are coming, sitting on the chair, do the work on the laptop and just shut the laptop at 6:30 p.m. in the evening and just go away. But the building where the production is happening, don't you think the depreciation will be more than the depreciation will be more on factory building in comparison to the office building? The deterioration, the erosion of factory building will be more. The vibration of factory building will be more than the office building. The pollution in the factory building will be more than the office building. Yes, yes. So the nature and use in the entity operation is different. For 3 building it is office, for 2 building it is factory. So it is this office building and factory building is considered as two class of asset. My dear friends, whatever model the company wants to use, the company has to use consistently to the class of asset. Means if the company is using a cost model to the office building, it has to be cost model for all the office buildings, right? The company can't do that. In a class of asset, 5 assets are there, for example. So on 4 asset, I will apply revaluation. On 1 asset, I will apply cost. No, not applicable. Not allowed. Not allowed. Okay. So whatever model you want to apply, you want to apply for the class of assets. Okay. So friends, have you understood this? The company needs to apply cost model, revaluation model consistently to a class of asset. Class of asset means a grouping of asset of a similar nature and use in an entity's operations. Okay. Now, my dear friends, now let's say examples are office building, factory building, vehicle, machinery, furniture and fiction, office equipment, computer, aircraft, land, ships. These are the examples of class of asset. Now, a company has 5 office building. Okay. Delhi, Mumbai, Jammu, Kanpur, Ludhiana. For Delhi, Mumbai, the value is increasing. The Jammu, Kanpur, Ludhiana value is decreasing. The company wants to apply revaluation model on Delhi and Mumbai building, and the company wants to apply cost model for Jammu, Kanpur and Ludhiana building. Is that a right treatment? Is that a right treatment? Answer is no, this is not right. Why? The company has to apply a single model, cost or revaluation, to the entire asset of a single class. This is not right. Okay, this is not right. Second, a company has 4 buildings. In Delhi, Mumbai, value is increasing. Jammu, Kanpur, value is decreasing. But Delhi, Mumbai building is for office purposes. Jammu, Kanpur building, the company has a factory. The company is opting revaluation model for Delhi, Mumbai. The company has opted cost model for Jammu, Kanpur. Is this treatment right? Is this treatment right? Yes. Why? In this case, there are 2 class of asset. Office building, factory building. For office building, the company has opted for revaluation model because both the buildings are revalued. And factory building, the company has opted for cost model. Both the buildings are carried at cost. In this case, the company has applied a single model for all the assets of a particular class, and hence it is right. And hence it is right. Okay. So friends, we have covered this aspect. Now it's 8:24 now. Let's have a break till 8:45. Okay. Then we will continue with the more concept of this Ind AS 16. Okay. We'll start at 8:45. 840, not 845. Sanket ji, can I start? Yeah. So friends, we discussed this cost model and revaluation model, right? And we discussed the carrying amount is computed using cost minus accumulated depreciation minus accumulated impairment losses. In the cost model, the cost is static. Original cost is not changing. But in revaluation model, the PP has to be carried at fair value and carrying amount is equal to revalued amount minus subsequent accumulated depreciation minus subsequent accumulated impairment losses, right? And with the help of this example, you guys have understood how to compute depreciation, right? Okay, and how to compute at a carrying amount. And we understood the meaning of revaluation model. We understood that if there is a high volatility, you have to do more revaluation, means revaluation at the every reporting date. But if there is very low volatility, not major volatility, right, do the revaluation at the interval of 3 to 5 years. Okay. So company needs to apply cost model or revaluation model consistently to a class of asset. If whatever model you are applying, the model has to be consistent across the class. Means if there are 20 assets in a particular class, all 20 assets has a same model. Okay. Now let's discuss revaluation gains and losses. Let's discuss the revaluation gains and losses. Okay. Yes. Friends, what is the treatment of revaluation gains and losses? Example, 1st April 2020, 31st March 2021, 31st March 2022. The building was purchased on 1st April 20 for rupees 10 lakhs. Okay. For rupees 10 lakhs. And on 31st March 21, at the end of the first year, the value becomes 12 lakh. On 31st March 22, the value becomes 9 lakhs. Okay. So on 1st April 2020, on 1st April 2020, this is my 1st April 2020. I purchased the asset for 10 lakh rupee. Building was purchased for 10 lakh. On 31st March 21, it become 12, means increased by 2 lakhs. And on 31st March 22, it becomes, on 31st March 22, it becomes 9 lakh, means decreased by 3 lakhs. Okay. The company has opted for revaluation model. Now you have to pass the journal entries. You have to pass the accounting entries. Okay. So I am taking two scenario here. Scenario number 1, scenario number 2. In scenario number 2, on 1st April 20, company has purchased an asset for 10 lakh rupee, building for 10 lakh rupee. On 31st March 21, it becomes 7. It reduced, decreased. And on 31st March 22, it become 11 lakh, right? So 1st April 2020, 31st March 2021, right? Then 31st March, then 31st March 2022. Oh. Okay. So let's solve this case 1 first. In case 1, the cost was 10 lakh rupee and at the end of the year, it become 12 lakh rupee. So the value has increased. When the value has increased, what is the first accounting entry? What will be the first accounting entry on 31st March 21? कौन सी accounting entry करेंगे? भाई पहली accounting entry क्या होगी? What will be the first accounting entry? Friends, building account debit, asset को debit करेंगे ना? If the value of the PP is increasing, you have to debit the PP. Building PP account debit. Building PP account debit. Okay. Building PP account debit. कितने से? 12 minus 10. 12 minus 10 lakh. 12 minus 10 lakh. Right? 2 lakh. Okay. Credit. What will be credited? There is a first time revaluation increase. So asset you have debited, but what will be credited? To revaluation reserve or revaluation surplus, whatever you can say, where it will go to OCI, other comprehensive income. This revaluation surplus will go to OCI reserve, OCI, other comprehensive income. This will be routed through other comprehensive income. You remember now, other comprehensive income. It is part of the P&L. Other comprehensive income is the part of the P&L, and other comprehensive income is not a distributable reserve, right? It's a separate reserve to be shown in the statement of changes in equity separately. So building PP account debit to revaluation surplus OCI account. Anyone who has any doubt? Aruna, Yogendra, Rohan, Rachit, Ravinder. Anyone who has any doubt? Building PP account debit to revaluation surplus account being building revalued. Now, on 31st March 22, what accounting entry I need to pass on 31st March 22? Now this 12 lakh value has been decreased to 9 lakh. This value of 12 lakh has been decreased to 9 lakh. There is a 3 lakh rupee decrease. So one thing is for sure, two building account. Two building PP account तो करना पड़ेगा. Yes, two building PP account credit. Of course, when the asset value is decreasing, you have to credit the asset. Two building PP account credit. क्रेडिट तो करना पड़ेगा. कितने से करना पड़ेगा क्रेडिट? क्रेडिट करना पड़ेगा 9 minus 12. Actually, I'll do 12 minus 9 because in entry you will not show negative. Okay. Yes, Ravinder. This building we have credited by 3 lakh rupee. What we will debit? How will complete this entry? Friends, please help me. Yogendra, help me here. Aruna, help me here. Yogendra, Rachit. What should I debit? Credit was very simple. When asset is increasing, you debit the asset. When asset is decreasing, you credit the asset. So Ravinder and Yogendra is saying, sir, revaluation surplus, please debit by 2 lakh. So what does it mean? It means if there is a revaluation surplus which is available, so this revaluation surplus is a balance sheet item. It is not a P&L item. It's a balance sheet item. It's a reserve item. So company has a revaluation reserve available, right? So if there is an increase initially, if there is a revaluation surplus available and subsequently there is a decrease and subsequently there is a decrease okay, what you will do? If subsequently there is a decrease, then whatever revaluation reserve which is available, right? The impairment loss, this is 12 minus 9, 3 lakh. This 3 lakh rupee first needs to be adjusted with the revaluation surplus available, right? So revaluation surplus OCI account debit. First, we will utilize our revaluation surplus to adjust this impairment loss. First, we will utilize our revaluation surplus. To what extent? To the extent of revaluation surplus available, and of course if it is less than the impairment loss, right? So if there is an impairment loss, first of all adjust the impairment loss with the available revaluation reserve. Now the remaining amount, impairment loss, this will go to P&L. The remaining amount will go to the P&L. Debit balancing figure, this will go to P&L. Okay, this will go to P&L. I hope this is clear. Being building revalued and first impairment loss adjusted to the extent of revaluation surplus available and balance charge to P&L. and balance charge to P&L. Okay. Anyone, any doubt, any problem, any question? Yeah. Suppose now on 31st March 23, let's take an example. 31st March 23. Okay. It become 8 lakhs. It becomes 7.5 lakhs. Then what will happen here? If it will happen, if it will become, let's say it will become right, let's say it will become 7.5 lakh. Then what will be the next entry? What will be the next entry then? क्या एंट्री होगी? 9 lakh. Here it is 7.5 lakhs. Okay. So decrease by, here again decrease by 1.5 lakh. So what is the next entry? What is the next entry? 31st March 2023. Since now there is no revaluation surplus available, simple. Impairment loss P&L, impairment loss P&L to impairment loss P&L 1.5 lakh, which is 9 minus 7.5, right? Impairment loss P&L 1.5, 1.5. Being subsequent impairment loss recognized. Being a building revalued and subsequent impairment loss recognized. Okay. Being building revalued and subsequent impairment loss recognized. Impairment loss recognized. Clear? Is that clear, my dear friends? So revaluation treatment is clear, right? When initially it was revaluation surplus. So what we did, of course, asset has to be debited, credit is revaluation reserve or revaluation surplus through OCI. Then subsequently there is an impairment loss. So to the extent we have the revaluation surplus, first we adjust our impairment loss with the revaluation surplus. If impairment loss is more than the revaluation surplus available, then the balance has to go to the P&L as an impairment loss. Subsequently, again there is an impairment loss. So then again you need to record your impairment loss in the P&L. Now the second scenario is your, let's say, on 1st April 20, 10 lakh rupee asset purchase. On 31st March 21, first time when you revalued, the value has been decreased. Then subsequently value has been increased. Okay. So company has opted for revaluation model. Now we need to apply the accounting treatment. So what is the accounting treatment on 31st March 21? Tell me. क्या accounting entry होगी? On 31st March 21, asset has been decreased. So first of all, I will credit the asset. सबसे पहले asset तो credit कर दूं ना? कर दूं या छोड़ दूं asset को? Asset has to be credited ना? So asset credited. To building account. To building PP account. Credit. To building PP account credit. Okay. Credit by what amount? Credit by what amount? 10 minus 7. 10 minus 7. 3 lakh. Debit, what will be debited? Impairment loss, because this is first time decrease. There is no revaluation surplus available. There is no revaluation surplus available. Impairment loss P&L debit. Impairment loss P&L debit. Impairment loss P&L debit, right? 3 lakh. Okay, any doubt here? Any doubt? I hope this is clear to everyone. Building revalued and impairment loss recognized. Building revalued and impairment loss recognized. Okay. 31st March 22. Now this 7 become 11. So this building value has been increased. Definitely I will debit building by 4 lakh rupee without thinking too much. मैं building को तो debit कर दूंगा. Building I will debit by 4 lakh rupee. Debit. But what is going to credit? But what will be credited? Yes, building debit 4 lakh. What is credit? Help me here. क्या करूं? पूरा का पूरा revaluation reserve credit कर दूं? Should I credit the revaluation reserve? Friends, if initially there was an impairment loss, subsequently the value has been increased. First of all, whatever impairment loss you have booked, you have to reverse the impairment loss. You have to reverse the impairment loss. 2. Impairment gain P&L. Credit. To the extent we have recorded impairment loss, we have to reverse the impairment loss. To the extent. Okay, 3 lakh. Credit. Then balancing figure 2. Revaluation surplus OCI. To revaluation surplus OCI credit. To revaluation surplus OCI credit. Okay, this is this minus. Okay. To revaluation surplus OCI credit. Okay, is that clear? Is that clear, dear friends? ये समझ आ गया? Okay. Yes. Now suppose on 31st March 23, let's do 31st March 23 also. On 31st March 23, again it becomes 9 lakhs. Again the value has decreased 9 lakhs. So yes. Now it become 9 lakh rupee. What is the accounting entry? 2 lakh decreased. What is the accounting entry on 31st March 23? Decrease of 2 lakh. तो बिल्डिंग को तो क्रेडिट कर देते हैं, राइट? लेट्स क्रेडिट बिल्डिंग 2 lakh. Now what will be debited? What will be debited? So there is an impairment loss. First of all, we have to see whether revaluation surplus is available. Yes, it is available. Let's use the revaluation surplus to the extent available. Sir, 1 lakh rupee is available. Okay, no problem. Let's debit the revaluation surplus by 1 lakh rupee. Okay, then the balancing figure will go to the impairment loss. Now you have to debit impairment loss. Debit. Okay. Okay, clear? Is that clear? I hope this is clear. So very simple. Whenever there is a first time increase, asset debit to revaluation surplus OCI. Subsequently decrease, for if subsequently increase, again revaluation surplus will be again credited if there is a subsequent increase. But if there is an initial increase, subsequent decrease, then whatever decrease is there, if you have the revaluation surplus which is available, first you have to adjust your revaluation surplus, okay, to take the effect of the decrease. Okay, if the decrease is more than the revaluation surplus available, then the balance will go to the impairment loss. Then if first time there is a decrease, okay, so if first time there is a decrease, of course you have to charge impairment loss. Subsequently there is a decrease, again charge impairment loss. Subsequently there is an increase, so whatever you have charged as an impairment loss, you have to reverse the impairment loss. Okay, if the increase is more than the earlier reversals, then of course then the balance will go to the revaluation surplus. So this is what we have discussed, my dear friends. Okay, this is what we have discussed. Let me take you to the PPT and quickly will PPT. I hope the PPT is visible to everyone. Is that visible to everyone? PPT is visible to everyone? No? Is it visible now? Yes. So we discussed that company can choose either cost model or revaluation model as its accounting policy, and accounting policy should be applied to the whole of a class of property, plant and equipment and not merely to individual asset within a class. It is applicable to the class of asset. Okay. This is what we discussed. Cost model means cost minus accumulated depreciation minus accumulated impairment losses is equal to carrying amount. This is the formula of the carrying amount. Revaluation model, after initial recognition, PPE has to be carried at revalued amount being its fair value on the revaluation date. And what is the formula of the carrying amount? Revalued amount on the date of revaluation minus subsequent accumulated depreciation minus subsequent accumulated impairment losses. If a single item of PPE is revalued, then the entire class of PPE to which that item belongs should be revalued. Right? Class of asset means a grouping of assets of a similar nature and use in an entity's operations. Revaluation model, we discussed, valuation need not to be performed every year or every reporting period. It has to be at sufficient regularity, right? Sufficient regularity means if there is a major volatility, every reporting date. If there is no major volatility, every 3 to 5 years. Okay. Then we discuss revaluation gains and losses. If there is a first time increase, you have to credit revaluation reserve. Again increase, again revaluation reserve. Then subsequently decrease, first adjust from revaluation reserve, then the excess impairment loss will go to P&L. If first time there is a decrease, of course it has to be impairment loss in the P&L. Subsequently again decrease, again P&L, but subsequently increase, first charge to P&L to the extent of earlier debit. First charge to means first credit to P&L. It is not charge, it is credit. First credit to P&L. Okay. To the extent of earlier booked impairment losses, then remaining to revaluation reserve. Okay. So this revaluation surplus adjustment case study we have already covered. In my example, you remember 31st March, you have seen na 31st March 21, 22, 23. This is the same case study. This is your homework. Okay. Now let's come to the utilization of surplus. Okay. Utilization of surplus. So how this surplus is going to be utilized? My dear friends, this revaluation surplus, you have recognized the revaluation surplus, so how it is going to be utilized? So friends, this revaluation surplus has to be utilized in two manner. Right? First of all, one thing is very much clear. That whenever the revaluation surplus has to be utilized, it will go to the retained earnings directly. Means it's a balance sheet to balance sheet entry. Whenever you will utilize revaluation surplus, what you will do? You will debit revaluation surplus or you will credit revaluation surplus? भाई आप क्या करोगे? आप रीवैल्यूएशन सरप्लस को डेबिट करोगे या रीवैल्यूएशन सरप्लस को क्रेडिट करोगे? व्हाट यू विल डू? whenever you will utilize revaluation surplus is a reserve, it's a credit balance. So what you will do, you will debit or credit, of course debit na, debit. You will debit your revaluation surplus. What will you credit? When you utilize your revaluation surplus, what will you credit? आप credit क्या करोगे? You will credit your retained earnings. You will credit your retained earnings. Okay, you are absolutely right, Ravinder. You will have to credit your retained earnings. So one thing always remember, whenever you utilize revaluation surplus will be debited and retained earning will be credited, right? So for sure this entry has to happen. Means the transfer of revaluation surplus, the utilization of revaluation surplus will not be routed through P&L. It has to be directly transferred to balance sheet. Means it's a balance sheet to balance sheet entry. इतनी बात सबको समझ आ गई? Have you been able to understand at up to this level? Okay, great. Now your revaluation surplus has to be utilized in two manner. Number one, at the time of disposal or derecognition of asset. Number two, during the life of the asset. So first is very simple. At the time of disposal or derecognition of asset, for example, the company has a property plant, the company has a building, and the company has revalued the building. Company has revalued the building. Okay. Company has revalued the building. Now, since company has revalued the building, the revaluation surplus was sitting at 10 lakh rupee. Okay. So when the company must have revalued, the company would have debited building and credited revaluation surplus. Now, the company has sold this building. So when the company has sold the building, the company must be credit building, right? So company must have been debited bank, settled the accounts. This revaluation surplus is sitting in the reserves. The building has been sold out. This revaluation surplus is also sitting. What we should do this revaluation surplus? So when you dispose of or when you derecognize the asset, the balance of revaluation surplus will also transfer to retained earnings. Okay, what is the accounting entry? Revaluation surplus account debit to retained earnings. Revaluation surplus account debit to retained. For example, A Limited has revalued its building on which revaluation surplus comes out to rupees 10 lakhs. Okay. The company has sold the building in the next year. What is the treatment of revaluation surplus on the date of the sale? क्या ट्रीटमेंट होगा? क्या करेंगे? बहुत सिंपल है. जो भी रिवैल्यूएशन सरप्लस है उसको कहां लेके चला जाऊंगा? रिटेन्ड अर्निंग. रिवैल्यूएशन सरप्लस विल बी ट्रांसफर्ड टू रिटेन्ड अर्निंग at the time of derecognition. Entry revaluation surplus account debit to retained earnings 10. Anyone who has any doubt up to this level, please let me know. Please let me know, my dear friends. अभी तक अगर किसी को कोई डाउट है तो बताइए. I want a confirmation from each and everyone who is listening me live. मुझे सबसे confirmation चाहिए. I want a confirmation from each and everyone. Yes. Saminathan, Ravinder, Yogendra, Rachit. Okay. Aruna. Okay. So at the time of disposal or derecognition, it is very simple. Revaluation surplus account debit to retained earning. Now, sir. So you told this revaluation surplus has to be utilized at the time of derecognition or disposal. That is okay. But can the revaluation surplus utilized during the life of the asset also? Yes, the revaluation surplus can be utilized every year to the extent of extra depreciation. So this revaluation surplus either can be utilized at the time of disposal of asset or it can be utilized during the life of the asset. Now, if you have to utilize the revaluation surplus during the life of the asset, how will you utilize? My dear friend, standard says that you have to utilize, you can utilize to the extent of extra depreciation. You can utilize to the extent of extra depreciation. Sir, extra depreciation means, okay, let's understand it. For example, life of asset is 10 years, cost is 1 lakh, revalued amount is 1,40,000. Revalued amount is 1,40,000. Okay, it is 1,40,000. Now, what is my depreciation on the basis of the original cost? 10,000. 1 lakh divided by 10, right? 1 lakh divided by 10. What is my depreciation on the basis of revalued amount? 14,000. 1,40,000 divided by 10. Okay, 14,000. Now, what is the extra depreciation? Since I have revalued, the value has gone up. The value has gone up. So my depreciation would be higher now. We have seen in the example of revalued amount, we have seen ना, जब वो थर्ड ईयर में रिवैल्यूएशन हुआ था, सेकंड ईयर में 60,000 become 90,000. So we started charging depreciation at higher amount. You remember that? Yes. So depreciation on the basis of original cost was 10,000. On the basis of revalued amount is 14,000. So my extra depreciation is 4,000. My extra depreciation is 4,000. It is my 4,000. Okay. Extra depreciation is 4,000. Is 4,000. Friends, my extra depreciation is 4,000. So how much? How much I can release from revaluation surplus every year? So revaluation surplus can be utilized every year to the extent of extra depreciation. What is the accounting entry? I told you accounting entry will always be revaluation surplus to retained earning. In the P&L, the entire 14,000 will go, but 4,000 will be transferred to retained earning every year. I hope this is clear to each and every one of you. मैं उम्मीद करता हूं कि आप सबको ये समझ आ गया होगा. आया या नहीं आया? प्लीज लेट मी नो. Have you guys been able to understand or not? Yes. Okay. Okay, let's discuss a question from the ICAI study material. Just a minute. Let me open a question on this from ICAI study material. Friends, just allow me a minute. I'm trying to open this ICAI Board of Studies material. I don't know why it is not opening. Yes. Just a minute. Okay. So there is a problem in opening that material. No problem. So let's continue with the session. And of course, there is nothing which is different or difficult in ICAI Board of Studies material in terms of this, what should I say, re-evaluation model questions. Okay. Okay, let's continue it, and at the last, if this file will open, at the last we will discuss this question. Okay. Yes. Now friends, now let's come to the next concept, which is depreciation. Friends, what is depreciation? What is depreciation? You all know depreciation? Yes. You know the depreciable amount. What is depreciable amount of an asset? What is depreciable amount of an asset? For example, you purchase an asset for 1 lakh rupee, life is 10 years. What is depreciable amount? What is depreciable amount? Depreciable amount is 1 lakh rupee, right? Depreciable amount is 1 lakh rupee. If you purchase the asset of 1 lakh rupee, life is 10 years. How much you will depreciate? 1 lakh rupee over a life of 10 years. Now, you purchase an asset for 1 lakh rupee. The scrap value, the residual value of this asset is 50,000 rupees. Sorry, 5,000 rupees. And you purchase the asset at 1 lakh rupee. The residual value is 5,000 rupee. What is the depreciable amount? What is the depreciable amount? Depreciable amount is 95,000 rupees. Depreciable amount is 95,000 rupees, right? So what is a depreciation? What is a depreciation? Depreciation means the depreciable amount of an asset has to be allocated on a systematic basis over the useful life. So depreciable amount of an asset has to be allocated on a systematic basis over the useful life. Depreciable amount of an asset has to be allocated on a systematic basis over the useful life. So this has to be depreciated. Okay. Yeah. Yes. Sorry. Yeah. So depreciable amount has to be allocated over the useful life. So this is 1 lakh minus 5, 95,000 rupees. 95,000 has to be depreciated over the 10-year life. Okay. So this is my depreciation formula. Okay. So depreciable amount of an asset has to be allocated on a systematic basis over the useful life, and this depreciation charges has to be recognized as an expense unless they are included in the carrying amount of another asset. For example, the company is using an asset. The company is using an asset for the purpose of constructing another asset. While you all know depreciation का treatment क्या होता है? Depreciation has to be charged to P&L. Depreciation has to charge to P&L, right? But if an asset is used in a different, in the construction of a different asset, then what will happen? Then what will happen? Then what will happen? Then this depreciation has to be capitalized. Then this depreciation has to be capitalized. So let me again take you on the Excel file and let me write a notes for all of you. Let me write a notes for all of you. Okay. So depreciation. Depreciation is systematic allocation of depreciable asset over the useful life. Depreciation is systematic allocation of depreciable asset over the useful life. Okay, over the useful life. Right. What is the depreciable asset? Example of depreciation is a systematic allocation of depreciable amount of the over the useful life. Example of depreciable amount. A Limited has purchased an asset for 10 lakh and expecting a residual value of 50,000. As per Companies Act, what is the percentage of residual value? 5%, right? As per Schedule 2 of the Companies Act, and expecting residual value 50,000. What is the depreciable amount. What is the depreciable amount? Okay. So depreciable amount is equal to depreciable amount is equal to cost minus residual value. So it is how much? It is 10 lakh minus 50,000. 9 lakh 50,000. 9 lakh 50,000. It is 9 lakh 50,000. Okay. Right. Clear? Now, what is my depreciation? What is my depreciation? Example of depreciation. What is the depreciable amount and depreciation? Depreciation is equal to depreciable amount divided by useful life. Okay. So 9,50,000 divided by 10. Okay, useful life is not given, so let me write useful life also. Okay, useful life is equal to 10 years. Right, what is my depreciation? 95,000. So depreciable amount divided by useful life. Clear? Is that clear? Yes. Now this depreciation, concept of componentization. Now let's discuss the concept of componentization also. Component approach. We discussed this component approach or we haven't discussed? So it says that if an asset has a different component, right? Different component means significant component, right? And they have a different useful life. If the asset has a significant component which has a different useful life, those component has to be depreciated separately, right? For example, major inspection or overhaul cost, major replacement cost, okay, significant component. So each major part of an item of PPE, with cost being significant in relation to total cost of the item should be depreciated separately. If different parts have same useful life, there are different parts but useful life is same, then you are not required to depreciate those parts separately. You can group it, right? You can charge the depreciation for the full value. But if the significant component has a different useful life, you have to depreciate it separately. For example, let's discuss the example of componentization. Okay. So in the fixed asset register, for example, in the fixed asset register, there is a turbine. Okay, there is a turbine. There is a windmill. In the fixed asset register, there is a windmill. And windmill has a multiple significant component. There is a turbine component, generator component, and other than the above. Okay. The total windmill is 700 crores. The cost of the turbine is 100 crore, 50 crore is the cost of generator, and the cost of the other than turbine and generator, the windmill cost is 550 crore. The turbine has to be replaced every 5 years. Generator has to be replaced every 8th year. And this rest of the component, rest of the windmill will survive for 15 years. These are the cost. What is the depreciation? This depreciation, for example, at the end of the first year, this divided by this. Okay. So your total depreciation will be 62.92. And what is your net block? Your net block will be this way. So this is how you will show in your fixed asset register, and this is how the computation has to happen. For example, aircraft. Let's take another example. Aircraft Boeing 777. Inspection component aircraft. So for example, life of inspection component is 5 years, aircraft is 20 years. So 10 crore is the cost of inspection component, 90 crore is the cost of the rest of the aircraft other than inspection component. So how will you depreciate this? Divided by useful life of the inspection component. useful life of the aircraft component. This is your net block. Okay. So this is the example of componentization. This is the example of componentization. Okay. So component approach. Let me again make more and the proper notes for all of you. Component approach. If significant components have a different useful life, these components has to be depreciated separately. Okay, right? Then I have given you the example. With this example, it is quite clear. This is quite clear. Okay. Net block at the end of the first year. These values are at the end of the first year. Is this clear? Okay. Let me take you to the PPT again. Okay. So when you will start depreciation, let me ask you a question and then you have to tell me when you will start depreciation. Saminathan has purchased a car and he took the delivery of the car, and he took the delivery. He parked the car in his garage. He parked the car in his garage, and the moment he parked the car in his garage, he got the call from USA and he went to USA. He went to USA. He has not used the car. He has not used the car. He went to USA for 2 years. He went to USA for 2 years. Right. And for 2 years, nobody has used that car. Nobody has used that car for 2 years. Nobody. Right? No one. No one was able to use the car for 2 years. Okay. Friends. If I talk about this example, tell me by when the depreciation should start. By when the depreciation should start. Tell me. Whether the depreciation should start from the date when he purchased the car or the date when he will start using the car, which is after 2 years. Tell me. See, the concept is not put to use. The concept is available for use. The concept is available for use. The concept is not put to use. The concept is available for use. The concept is available for use, right? Available for use. So the car was available for use when he took the delivery of the car and put the car on the garage. It was available for use. और वैसे भी क्या खड़ी कार पे depreciation नहीं होता? Depreciation is always on the use, whether on the effects of the time, whether on the passage of the time, depreciation will not be charged. Whether depreciation will not be charged on the passage of the time. Yes, depreciation is charged on the passage of the time also. The life of the car is 10 years and we will not use the car, whether car will not depreciate, the value of the car will go down, the depreciation has to be charged. Okay. So depreciation of an asset begins when it is available for use. Depreciation of an asset begins when it is available for use, that is, when it is in the location and condition necessary for it to be capable of operating in the manner intended by the management. Depreciation is charged till the point residual value is greater than equal to carrying amount. Means depreciation cannot be charged more than the depreciable amount. What is depreciable amount? For example, value was 1 lakh, scrap value was 5,000. So depreciation has to be on the depreciable amount, 95,000. Because due to depreciation, the value of the asset cannot be negative. क्या आप depreciable amount से ज्यादा depreciation charge कर सकते हैं? Can you charge depreciation more than the depreciable amount? Yeah? Can you charge depreciation more than the depreciable amount? No. you can't charge depreciation more than the depreciable amount. Okay, you can't charge depreciation more than the depreciable amount. Okay, more than the depreciable. So this is what it's saying. Third, depreciation ceases when an asset is derecognized or held for sale. When an asset is derecognized or held for sale. Okay, right? So we will discuss. So of course, when it is derecognized, asset is not there. Will you charge depreciation? If the asset is not there in the books of accounts, will you charge depreciation? Yeah. You will stop charging depreciation if the asset is not there. Or when it is classified as held for sale. We will also cover Ind AS 105. In Ind AS 105, we will discuss the concept of asset classified as held for sale. Right? So this asset held for sale under Ind AS 105, if the asset is classified as held for sale, then depreciation will not charge. Depreciation has to be stopped the moment asset is classified as held for sale. Okay? Right? Depreciation does not stop automatically when the asset is idle. Many companies during the COVID time, many companies returned to the institute. And I was fortunate to the part of that we have developed FAQs material on the COVID, right? So basically accounting treatment in case of COVID, right? On various items. And I have written the FAQ. So I have also contributed in the institute material where I have written an FAQ that the companies are not able to use the asset in the lockdown. So whether depreciation has to be charged or not charged. So standard says that depreciation does not stop automatically when an asset is lying idle. So all the companies have continued to charge the depreciation even though when the asset is lying idle. Okay, right? Any question up to this level, my dear friends? Any question? We will discuss practical question on these aspects also. But any question up to this level? अभी तक आपका कोई सवाल है या नहीं है? अभी तक आपका कोई सवाल है या नहीं है? नहीं है? Any question? So up to now, everything seems to be clear. Okay, great. Now, my dear friends, there are method of depreciation also. Have you heard about method of depreciation? What are the three methods of depreciation, Yogendra? You can unmute and you can also speak. What are the three methods of depreciation?
Sir, straight line method, written down method, and unit method, sir.
And unit of production method, unit of digit method, unit method. Okay, unit method. Very good. So there are three methods of depreciation. Straight line method, WDV method, and unit of production method. Right. Now, up to now, we all know that there are three methods of depreciation and companies has to apply the method of depreciation. But do we know how the companies select the method of depreciation? Whether you guys are aware how the companies select the method of depreciation? क्या ये पता है आप लोगों को? क्या आप लोगों को पता है कि कंपनी डेप्रिसिएशन मेथड को कैसे सेलेक्ट करती है? डू यू नो और यू डोंट नो? Yes. Rachit is saying no. Ravinder is saying no, sir. Please explain. Yes. So what is this depreciation? Why we are charging depreciation? Why we are charging depreciation? Why we are charging depreciation? Tell me. Why we are charging depreciation? आप depreciation क्यों charge करते हैं? We are charging depreciation because when we use the asset, either by the using the asset or by the time of the asset, by passing time of the asset, the value of the asset deteriorated. The asset will deteriorate. Right? Wear and tear has to be there. Means the depreciation of the asset is directly related to the consumption of the asset. What this depreciation reflect? This depreciation reflect the consumption of the asset. This depreciation reflect the consumption of the asset. How the consumption of the asset? What is the commercial language of the consumption of the asset? Future economic benefit. Future economic benefit is the commercial language for the consumption of the asset. So method of the depreciation depends on the future economic benefit of the asset. For example, if an entity is expecting a consistent future economic benefit, if an entity is expecting a consistent future economic benefit, if an entity is expecting a consistent future economic benefit, a consistent future economic benefit, then what is the right method of depreciation? Tell me. So entity believe I will get a straight line, I will get a consistent, I will get a similar consistent future economic benefit. Then SLM is a right method of depreciation, right? This will give, when you are expecting a equal future economic benefit, you will charge equal depreciation. Straight line method will give you the equal depreciation in the books of account. What is meant by reducing? What is meant by reducing? Balance method. What is meant by reducing future economic benefit? If the company believes that my future economic benefit will keep on reducing, will decreasing, so WDV method is an appropriate method of depreciation. So in the initial year, the company will utilize the asset more, the company will produce more, and company will depreciate more. In the years passing by, the production or the consumption or the future economic benefit will go down, the depreciation will also go down. This is known as a WDV method, right? 100 rupee is the cost of the asset, 10% is the depreciation. In the first year, 10 rupee will be the depreciation. WDV 90. In the next year, 9 rupee will be the depreciation. In the third year, 8 rupee 10 paisa will be the depreciation. So higher depreciation in initial years and it will go down. Okay. So reducing balance method is WDV, written down value method, is appropriate when there is a reducing consumption trend and reducing future economic benefit trend. Now third is on the basis of usage. Unit production method is appropriate when the benefit comes from the usage. For example, have you buy any projector? Have you bought projector? You know what is projector? Which projects? For showing the movie, right? For teaching in the class. So let's say if you have not bought the projector, let's go to buy a projector. I'm not saying to buy a projector. I am saying go and inquire about the projector. Okay. So friends, if you go and inquire about projector, you will not get the life of the projector. You will not get the life of the projector in years. For example, 10 year, 5 year. Okay. You will get the life of the projector in the lamp hours. This projector will run for 50,000 lamp hours. Means the life of the projector is 50,000 hours. Now it's up to you whether you will spend 50,000 hours in a year or in 5 year or in 10 year, right? So means this projector life is as per the units consumed. So in this case, for example, total life is 50,000 hours, and in the first year the company has used only 10,000 hours. Only 10,000 hours. Okay. Only 10,000 hours. So what will be the depreciation? For example, value of the projector is 1 lakh, multiply by 10,000, divide by 50,000. That will be your depreciation. So if the asset consumption is on the basis of the usage, then unit of production method is the most appropriate method. Okay. It is the most appropriate method. So is that clear? Have we understood the method of depreciation? So depreciation method adopted should reflect the pattern in which assets future economic benefit are expected to be consumed by the entity. Okay. If there is a significant change in expected pattern of consumption, then method of depreciation will also be changed in line with the future benefit. So the company was using SLM method, but after 2 years, the company is expecting that the future economic benefit will have a downtrend. So if the future economic benefit has a decreasing trend, then this SLM method has to be moved to the WDV method. Sir, can we say when the technology is obsolete rapidly, then we can use WDV, and when the technology is not obsolete? This is one of the example, Rachit. This is not good in all cases. This is one of the example. Yes, you can say that. Okay. So SLM is applicable. SLM is good when there is a constant charge, WDV with diminishing charge, unit of production method, unit of digit method, charge based on the expected output. Friends, this change in depreciation method will be considered as a change in policy or change in estimate. This change in depreciation method is depending on the expected future economic benefit. This future economic benefit is an estimate, right? Friends, whether change in depreciation method is a change in policy or change in estimate? Tell me, क्या है ये? Change in policy है या change in estimate है? It is a change in estimate. You are absolutely right, Ravinder, because you are absolutely right because this method of depreciation depends on the future economic benefit. Future economic benefit to come in future is not certain. It is expected, estimated. So change in depreciation method is also considered a change in accounting estimate. Okay, right? Clear? Now let's discuss one of the illustration from ICAI study material. An entity acquired an asset 3 years ago at a cost of 5 million, means 50 lakh rupee. The depreciation method adopted was for the asset was 10% WDV method, 10% WDV method. 50 lakh was the cost, 10% is the WDV method of depreciation. At the end of year 3, means first year, second year, third year have gone. The entity estimated that the remaining life of the asset is 8 years and determined to adopt straight line method from that date so as to reflect the revised estimate pattern of recovery of economic benefit. So up to 3 year WDV method was there. From the 4th year and onwards SLM method was adopted. So my cost was 50 lakh. What is my first year depreciation? 50 lakh was my cost. What is my first year depreciation? What is my first year depreciation? What is my first year depreciation? Yeah. What is my first year depreciation? 10% WDV 5 lakh. What is my second year depreciation? What is my second year depreciation? 4.5. What is my 45 minus 4.5 is 40.5. Then 40.5. What is my third year depreciation? 4.05. Okay. So it is coming out at 0.45 and 40 minus 4 is 36. 36.45. Now 36.45, the remaining useful life of the asset is 8 years. So this 36 point, so this is the depreciation first year, second year, third year. Now 36 lakh 40,000, 36 lakh 45,000 divide by 8. This will give you 4 lakh 55,625 every year. Okay, right? This has to be divided by 8, depreciated over the next 8-year period. I hope this is clear to each and every one of you. Yes, cost to revaluation model is a change in policy, but I am talking about depreciation method, Saminathan. So depreciation method change is a change in accounting estimate. Okay, it is a change in accounting estimate. Okay, yes. Now change in estimate and change in residual value, my dear friends. Useful life, since it is an estimate, useful life is also an estimate. Useful life and residual value has to be reviewed at every year end. You have to review your useful life and the residual value at the end of every year. If there is a change in useful life or residual value, the same is treated as a change in policy or change in estimate. The change in the the change in the useful life and the change in the residual value has to be treated as a change in estimate, right? And whenever there is a change in estimate, you have to do retrospective calculation or prospective calculation. You have to do prospective calculation, not retrospective, prospective, right? So your depreciation method, okay, your useful life, okay, and residual value, all these are estimate, okay. And whenever there is an estimate, it has to be applied prospectively. It has to be applied prospectively, okay. So future annual depreciation will be revised basis the new useful life, okay. Now let's discuss another question from ICAI study material. XYZ Limited purchased an asset. XYZ Limited purchased an asset on 1st January for rupees 1 lakh. And the asset had an estimated useful life of 10 years and a residual value of nil. Okay. So before this, let me write this part on the Excel file also. Okay. Other concept of depreciation. Okay. So number one, depreciation has to be charged when the asset is available for use. Right? Available for use. Students, please note, the concept is not put to use. It is available for use. In your exam, if put to use and available for use, both the dates are given, please use available for use date for the purpose of depreciation, right? Please keep in mind for computing depreciation. ये भी लिख दिया मैंने, ठीक है ना? ये भी लिख दिया, right? ये भी लिख दिया. Now, depreciation has to continue when the asset even the asset is lying idle. Third, depreciation has to be stopped when the asset is derecognized, disposed of, or classified as held for sale. Right. Four. The method of depreciation depends on the expected future economic benefits. Okay. There are three method of depreciation. Okay. SLM, WDV, and unit of production oblique unit of digit method also. Okay. Now useful life and residual value has to be reviewed at least at the end of the year. Okay. 6, depreciation method method, useful life and residual value are the estimates, and any change will be treated as a change in accounting estimate and has to be applied prospectively, right? Has to be applied prospectively. I hope you are happy with this all notes in the Excel file as well, while these are given in your PPT as well, but I believe you guys feel happy about it. Okay. Yes. Great. Now, let's discuss this question. XYZ Limited purchased an asset on 1st January 20x0 for rupees 1 lakh, and the asset had an estimated useful life of 10 years and a residual value of nil. So 1 lakh rupee is the cost of the asset. January 20x0 purchase, useful life 10 year, residual value 0, means depreciable amount. Means what is the depreciable amount? Depreciable amount is your 1 lakh rupee, right? क्योंकि कोई residual value तो है नहीं. The company had charged depreciation using the straight line method of 10,000 rupees per annum. It is also given. On 1st January 20x4 means after how many years? So January से start है, January to December 20x0 first year, x1 second year, x2 third year, x3 fourth year. 4 years have been completed. On 1st January 20x4, the management of XYZ Limited reviews the estimated life and decides that the asset will probably be useful for a further 4 years. So in this case, on 1st January, so while the total life was 10 years and 4 years has gone, so remaining life has to be 6 years. But on 1st January, it was estimated that the remaining life, that the asset will probably be useful for a further 4 years, right? So remaining 6 plus 4, no. The asset will probably be useful for a further 4 years, and therefore the total life is revised to 8 years, right? So the remaining life is not 6 years, the remaining life is only 4 years. How should the asset be accounted for remaining years? क्या करें? So friends, what is my original cost? 1 lakh. What is my accumulated depreciation for the last 4 years? मेरा accumulated depreciation कितना last 4 years का? 40,000. So what is my opening WDV on 1st January 20x4? What is my opening WDV, opening balance on the 1st January 20x4? 60,000. Now my remaining life is 4 years. What is my per annum depreciation? 60,000 divided by 4, 15,000. As simple as that. Yes. So change in useful life of an asset is change in accounting estimate, which has to be applied prospectively. That is, depreciation charge will needs to be recalculated. On 1st January 20x4, when the asset's net book value is 60,000, the company should amend the annual provision for depreciation to charge the unamortized cost, that is 60,000, over the revised remaining life of 4 years. Consequently, it should charge depreciation for the next 4 years at 15,000 per annum, right? Very simple. Now let's talk about retirement and disposal. The carrying amount on PP shall be derecognized. Death of the asset, end of the life cycle. So when you will derecognize your PP? When you dispose of the PP or your PP stopped giving future economic benefit. Future economic benefit देनी बंद कर दी PP ने. Your PP has stopped giving future economic benefit. Okay, future economic benefit. Right? Okay. Right. So when you have derecognized PP, you have sold PP. So the carrying amount was 1 lakh, you sold it 1 lakh 10,000. Where the gain will go? Whether it is revenue from operations or other income. Whether it is revenue from operations or other income, it has to be other income. Right? The WDV of the PP is 1 lakh, you sold PP at 80,000. This 20,000 loss, where the loss on sale of PP will go? Where? Other expenses. Okay, so it is saying that the difference between the disposal proceeds and the carrying amount of the asset has to be recognized in profit and loss. The gain shall not be reclassified as revenue. It is not revenue from operation. It is other income. Now let's discuss some multiple choice question. A change in depreciation method is a what? Is a what? पहले ही आंसर दे दिया कुछ लोगों ने. Change in policy, change in estimate, change in method, change in standard. What is the right answer? The right answer is it is change in accounting estimate. This is the right answer. Change in accounting estimate. Okay. This is the right answer is change in accounting estimate. The right answer is change in accounting estimate. When an asset is sold or disposed of, where is the gain or loss recognized? Where the gain? Asset disposal account, profit and loss, revaluation reserve, depreciation. Where? When the asset is sold or disposed of, where the gain or loss recognized? It has to be recognized in. It has to be recognized where? It has to be recognized in P&L. It has to be recognized in where? P&L. It has to be recognized in P&L. Okay. In P&L. Yes. Answer B. P&L. Under Ind AS 16, how often should the useful life of the asset be reviewed? How often the useful life of the asset should be reviewed? कब कब करनी है useful life? At least at each financial year ends, every 6 months, at the choice of the management, never. What is the right answer? What is the right answer? Yes, it is at least at each financial year end. It is at least at each financial year end. Okay. Yes. How should an item of PP be initially recognized in the financial statement? Measure at market value, measure at cost, measure at NRV, measure at fair value. Tell me. At what value? Measure at market value, cost. कैसे इनिशियल रिकॉग्निशन करेंगे? कॉस्ट इंक्लूड्स परचेज प्राइस, import duty, non-refundable taxes, trade discount, rebate, directly attributable cost, decommissioning cost. Measure at cost. Yes, it has to be measured at cost. If one large asset has a number of individual components with different useful life, how should this be depreciated? Treat as one asset, break down into different components, expense it all, treat as one asset but disclose in the notes to accounts. What is the right answer? What is the right answer, my dear friends? Yes, break down into different component. Break down into different component. Okay. Under Ind AS 16, which two subsequent accounting treatments are allowed subsequent to initial recognition? Cost model and present value model, cost model and revaluation model, fair value model and revaluation model, fair value model and cost model. Oh, sorry. Cost model and revaluation model. You all know this. Okay. Question number 7. When it is dash that future economic benefit associated with an asset will flow to the entity and cost can be dash measured, it should be recognized as an asset. Possible reasonably, possible reliably, probable reliably, probable reasonably. What is the right answer? When it is possible or probable? First of all, tell me. When future economic benefits are possible or probable? Future economic benefit is possible or probable? Probable. When future economic benefit is probable, means the answer has to be C or D. Now, when the cost can be reliably measured or reasonably measured? Cost can be reliably measured. So right answer is C. This is the way you need to think and you need to answer. Okay. Okay. When the future economic benefit is probable and the cost can be measured reliably. Which of the following is not an asset which falls under the scope of Ind AS 16? Tangible asset. Asset held for production or supply of goods or services. Asset held for sale in the normal course of the business. Asset expected to be used for more than one period. Which is not the right answer? Tell me. कौन सा आंसर सही नहीं है? Which is not the right answer? Yes, 8C is inventory. 8C is inventory. Okay, it is inventory. When the revaluation model is used for PP, the gain or loss should be included in income for the period, gain from revaluation on the income statement, or revaluation surplus account in OCI, and extraordinary gain or loss in the income statement. What is the right answer? What is the right answer, my dear friends? Yes. Yes. A revaluation surplus in the in OCI. Okay. Which of these is an allowable cost of an asset under Ind AS 16? Which of these are the allowable cost under Ind AS 16? इसमें से कौन सी allowable cost है Ind AS 16 में? Tell me. Which of these are allowable cost in Ind AS 16? Which costs are allowable cost in Ind AS 16? Tell me. सर ऑप्शन तो बताइए. प्रोफेशनल फी, जनरल ओवरहेड, इनिशियल ऑपरेटिंग लॉसेस, एडमिनिस्ट्रेशन एक्सपेंसेस. कौन सी कॉस्ट अलाउेबल कॉस्ट है? Which of these is an allowable cost of an asset under Ind AS 16? Yogendra is saying A. Saminathan is also saying A. Yes, general overhead cost is not an allowable cost. Initial operating loss is not an allowable cost. Administrative is not an allowable cost. Professional fee is an allowable cost under Ind AS 16. Under Ind AS 16. Okay, right? So now, thank you. So friends, and let me cover some more MCQs which I have shown you in the last class, right? So question number 7. From here I need to cover it. Okay. A company replaces. I hope this is visible to everyone. Is it visible? My word file is visible for the MCQ. Is it visible for the MCQ? Yes. Okay. A company replaces. A company replaces a major component. A company replaces a major component of a machine. The replacement component meets the recognition criteria under Ind AS 16. What should be done with the carrying amount of the replaced component? क्या करना है? जो carrying amount है replaced component का उसका क्या करना है? Continue depreciating both component, expense the new component immediately, capitalize the replacement component and de-recognize the carrying amount of the replaced component. Capitalize the replacement component without de-recognizing the old component. What is the right answer? What is the right answer? Yes. क्या होगा right answer? Yes, C is the right answer. C. Major inspection expenditure. A passenger aircraft undergoes a major scheduled inspection every 5 years. The inspection cost meet the recognition criteria under Ind AS 16. How should this cost be treated? Expense when incurred, capitalized as part of PP and depreciate over the appropriate period. Recognize as an intangible asset, recognize as a provision. What is the right answer? What is the right answer? Capitalized as a part of PP and depreciated over the appropriate period, which is 5 years. You're absolutely right. Under the cost model in Ind AS 16, PPE is carried at fair value less accumulated depreciation, cost less accumulated depreciation less accumulated impairment losses, replacement cost less depreciation, fair value less accumulated impairment losses. What is the right answer? Ravinder, what is the right answer for question number 9? What is the right answer for question number 9? B is the right answer for question number 9. Cost less accumulated depreciation and accumulated impairment losses, right? B is the right answer. Now, last question, question number 10. An entity adopts a revaluation model for a class of PPE. An entity adopts the revaluation model for a class of PPE. Which statement is a right statement? Which statement is right? Revaluation is permitted for only one individual asset within a class. Revaluation increases are always recognized in P&L. Asset in the same class should generally be revalued with sufficient regularity so that carrying amount do not differ materially from fair value. Once the revaluation model is adopted, the entity can never change its accounting policy. Tell me which statement is the right statement. Revaluation is permitted for only one individual asset within a class. Wrong. Revaluation model, if you are opting, you have to opt for all assets within a class. Revaluation increases are always recognized in P&L. Wrong. It has to be recognized in OCI. Asset in the same class should generally be revalued with sufficient regularity, right? So that the carrying amount do not differ materially from the fair value. C is the right answer, right? So once the revaluation model is adopted, wrong. The company can go to the cost model also. When the revaluation model is applied, it is applied to an entire class of PP, not selectively to individual asset, and revaluations must be sufficiently regular. My dear friends, we discussed 20 multiple choice question. We discussed almost, if I take the count of the example in day 16, we discussed almost 15 examples in the Excel file, okay, on every topic. And we discussed almost 7 to 8 questions from ICAI Board of Study material. Right? You have to solve each and every question from ICAI Board of Studies material, right? And I hope you have enjoyed the session. Please go through with the Excel file, go through with the PPT. When the depreciation has to be capitalized, Rachit is asking, so let me write one example on the capitalization of depreciation also. Okay. So friends, allow me 5 more minutes. Let me give you an example of capitalization of depreciation, right? Okay. Depreciation has to be charged to P&L except if the asset is used to construct another asset, the depreciation can be capitalized as a part of the cost of another asset, right? So I have written this concept. Now let me give you an example. Shall I give you the example of this also? Example. A Limited purchased a crane for business purposes for rupees 10 lakhs and the life of the crane is 5 years. Okay. A Limited purchased the crane on 1st April 2024 for business purpose and life of the crane is. So this crane from 1st April 2025 to 31st March 2026, this crane is used in the construction site of the factory. Please suggest the accounting treatment and amount of depreciation for FY 24, 25 and FY 25, 26. Okay. Now FY 24, 25. What is your depreciation? Depreciation is equal to how much? Simple depreciation is 10 lakh divided by 5. 2 lakh is the amount of depreciation. It has to be charged to P&L. Now, FY 25-26. This depreciation of 2 lakh has to be capitalized to CWIP account, to CWIP of factory. Okay, right. Rachit, is it okay now? Have you guys been satisfied now? So this example I have also covered in my Excel file. Okay, right. So my dear friends, we have covered this Ind AS 16 in detail. I hope you have enjoyed a lot. Okay. So thank you so much. If you have any question, you can ask the question. Otherwise, I'll conclude the class. Okay. Great. Thank you so much. Thank you so much. Bye. Take care.
Recording stopped.